Welcome to this week's Tuesday Night Live, everybody. Thanks a lot for tuning in and spending your Tuesday evening with us. Today I have a special guest. We have Dinisha from Zinger Finance. If you know who Dinisha is, you've spoken to her beforehand, give her a like and a thumbs up to the video and give her a little comment. She's always a little bit nervous when we come on live. But lots of people out there that love you, Dinisha, because a lot of people think, how can I build wealth? How can I build a portfolio? I love to buy properties that are cheap and well priced and that, but if they can't get the money to buy the property, they can't do the deal. And you help a lot of people do that. So you got Nathan says, hey Dinisha. We've got Sam that says inflation figures come out tomorrow at 11:30 a.m. Exactly, very exciting things. So before we get started, I'm going to jump in and go through all my news articles and whatnot, but I'll do a little introduction to Dinisha here. For those of you that don't know her, Dinisha is one of our brokers at Zinger Finance. And how long have you been here for now? Like 6 years?
6 years.
6 years. There we go. 6 years, long time. Yeah. Had a lot less grey hair back then. Yeah. So
I'm still the same.
You're still the same. You look so young, Dinisha. I always make little jokes about you that you look very young. So it's good. So for those of you that don't know, Dinisha works at Zinger Finance. Maybe if you want to give everyone a little brief about what you do, and we'll ask some questions about you. And So
I've been in the company since 2017, and I've only been a broker for probably 3 years now.
Yeah.
So I deal with clients getting their loans for, if they're buying investment properties, not just investment, but also if they want to get their principal place of residence or constructions, self-managed super fund. I talk to them daily and knowing, do their serviceability, what their borrowing capacity, seeing which bank is suitable for them, structuring their loans, and then also, launching their applications and making sure they settle in a timely manner.
Internally, I'm giggling, right? Internally, I'm giggling at you because you are very humble with what you do. But, there's thousands of people out there that we've helped over the last 14 years in business. For the last 6 years, you've been working hands-on with those investors building their portfolio. You have got hundreds of investors which have 6 or plus properties. You've got dozens of investors that would have 10, 15, 20 properties in their portfolios. You are single-handedly responsible for these guys being able to create wealth. And I always say, when I speak to my investors for the first time, I'm like, I tell them what I think they can do. And I say there's 1 or 2 reasons, there's 3 reasons why they won't get there. Right? I'll give them, this is what I think you should do, this is what I think is possible, but this is what will happen if you don't get there. This is what will hold you back. Either you'll fuck up, like they'll mess up and do something wrong, we'll stuff up and not get them there, or aliens will come and destroy the world. Something out of our control. Yep. And we've seen a pandemic, which our investors done really well out of. We've seen a lot of people do very good things. You've seen people in very unfortunate positions when they come to us, and you've been able to turn their life around and get them large portfolios. And we've seen people that have had great positions and they just do nothing about it. Right? It's up over to them. And your guidance, your understanding of loan products, your understanding of what it takes to build a portfolio is unlike any of the other brokers out there. And that's, you've been here for 6 years, but you've, just like Drake says, right? You started from the bottom, now you're here, right? You've learned everything there is about brokerage and
Thank you.
That's good. So a couple of questions before we get into tonight's live. We're going to talk about all different things loans, if you haven't realised that today. I've got my news articles to go through, some topics to discuss, but a few questions for you, Dinisha. So if you could have dinner with any historical figure, who would it be and what would you ask them?
Okay, so I would have dinner with John Templeton.
Okay.
So he's a American investor banker, and he bought during the Great Depression when when
Yeah.
World War II was having like the longest recession. So just wanted to ask like how was, investing back then? What
Okay.
was it difficult,
Okay.
compared to where we are now? And yeah. Just,
When I read the question, I actually thought to myself, who would I, if it was put on me? And then as you were answering it, I actually thought of two people, right? I thought, this is like random, right? I thought like Jesus or Muhammad, I don't know why. I don't know why. I was a bit like, well, tell us more about life, right? Literally, that's what I thought about, but it's cool. I didn't know who John Templeton was before now, so that's,
there you go.
I learned something new too, right? So, cool.
Actually, I also have another one.
Who?
I don't know if I should say
You can
it.
say whatever you want.
Hitler.
Hitler, wow, you went there. Wow, I say whatever you want, and I say some pretty out there stuff. Why?
I just want to know, like behind everything, like what's
Yeah.
like in his brains, like what's his thought process when it comes to like all that Nazi time and all that. Oh my God, I hope I'm not opening a can of worms.
No, that's fine. I'm not. No, look, I don't know. I've never met the bloke, right? So I can't have comment. People have comments about things in history. I'm just thinking about when people get censored on the internet, and it's
Yeah.
actually those words that you just said. It breaks their videos, right? It's pretty funny.
No, like
Yeah.
the mentality, like why. So I would like to actually have a dinner. And
I've done a bit of research into him, and there's actually another guy. Do you know what he's most famous for, apart from killing people? He was actually the founder of Volkswagen.
yes,
He's the founder of Volkswagen. And there was another guy that was very similar to him, but he didn't go on to do all the things that he did. His name was Henry Ford. And they're actually both very powerful and had very similar views. And Ford wrote a book and owned a lot of newspapers at the time. And basically, if you think about Shark Tank, right? Like Henry Ford had made a vehicle that was made out of hemp. It was actually made out of hemp and ran on hemp. This is a full random history lesson here, guys. And the car was indestructible, basically. You can YouTube it and look up the hemp car that Henry Ford made. And imagine you're doing Shark Tank, you're like, okay, we've got some investors here, we want to invest into it. And imagine you had some oil barons, right? Those oil barons are like, okay, we will invest into your product, but we want it to run on oil so we can sell our goods, right? And that's what helped rule the Industrial Revolution, was the oil industry and these guys. And I think there's a lot that is hidden in history, and we've seen the last few years it's been hidden. We've seen, I don't know the bloke, I've never met him, so I couldn't make any comment on it, but that's interesting that you said that. That was a really surprise, like, you're like, very...
Should I say it or not?
Well, I'm very surprised. That's a interesting one. So
Yeah, I think
you surprised me there.
I should stop that.
No, it's alright. Like people say
I
Kim
think about all
Jong-un.
these things.
People
like,
say Kim Jong-un's a bad bloke, right?
Yeah.
But why? I've never met him. I can't make that thing about him. Like, I've been told from censored media about that person doing certain things. So
Yeah.
it's interesting. So, if you had a time machine then, please don't say 1930s. If you had a time machine,
I don't want to go through that.
when would you go back to in time if you got a time machine?
1970s.
Okay.
Just when time were a bit simpler.
Okay.
I feel like, I don't know, like no technology, just,
Yeah.
I don't know, running around, playing, going out, meeting people.
Yeah.
Yeah.
There we go.
Times was simpler.
LSD.
I think that's when
LSD
my
flowers.
Like, when you don't have watch, you just look at the sun, you're like, yep, that's, what time
It's home
it is.
time now. The sun's
Is it
coming.
lunchtime or home time, so you just look at the sun?
There we go. I don't know what I'd go back to. I think something to do with like prehistoric times. Like I want to know about Antarctica. That's what I'd like to know. Something about Antarctica. Something odd about that, right? No one's allowed to go there.
Yeah.
Very interesting place. I'd love to be able to, go to a place when that was around. Maybe go to Egypt or something when they're doing the pyramids. Imagine
When
like
they're
seeing the
building
pyramids.
it,
That
yeah.
would be cool. Yeah. We should be on Bill and Ted's Excellent Adventures. You know that? She doesn't know Bill and Ted's Excellent Adventures. It was an old movie from like the 80s or something. I only saw it because it was on repeat throughout the 90s in Channel 10. But it was like, what's his name? Keanu Reeves. He hops in a time machine in a phone booth and goes to a different
Is
alternative.
it a movie?
It's a movie. It's like, Back to the Future, but it's Bill and Ted's Excellent Adventure. They hop in a phone booth and travel with the time. If you think about it, actually, the Matrix, he hops in a phone booth and does the same thing.
Yeah.
Imagine if they're both connected. There's a spin out for everybody.
I only know him through John Wick.
Okay. Jay just said, go back and buy Bitcoin, obviously. There's a pretty good one. That would be a pretty good one. If you could magically simplify one aspect of the mortgage process for borrowers, what would it be and why?
Simplify supporting documents. So,
Okay.
like, I think most of the clients here would know that we always are supporting documents non-stop, and
Yep.
it's a lot of documents. So if I could simplify it, I would like to simplify that. Like, example, we have bankstatements.com.
Okay.
So, like, when we ask for statements, they just have to click the link and click on whatever account, and it just spits out all the statements we need.
Wow. Okay.
Yeah. So, like, when we launch applications, and we have this thing called Apply Online, where, let's say if it's like cater to your scenario, your finance position, then they will ask to that specific documents instead of asking like a whole bunch of documents. So if there's like a self-employed, okay, this is what you need. It's like PYG, this is what you need.
Okay.
Sort of thing. So I think, yeah, I would simplify that.
Well, I think also like how people could help you in that process and help themselves is like process. Like inside our businesses, like we have good processes with how workflow happens and all that sort of stuff to make things simple for people. But for their own self, like you might need to go to look up your email addresses from 3 years ago, and you're going through, I don't know, subscriptions, your Netflix subscription, your gym subscription, your bloody shopping subscriptions that scalp your email, whatever you have to go back through. But instead of having all them there, like you could have one place where you have your own email address. So I have an email address for my property stuff, and I let other people go in there. I don't care. Like if I need someone in accounts to look after or whatever, they just go into that email address and happy days. So, people have like rentals that, I won't go into what my ones are because people might spam me or something, but I have email addresses just specifically for my property. People don't even know what it is. It's just my property address. You have it too, yeah. So
and I tell it to my clients as well, and they also have it. So whenever it's like property related, straight away goes to that specific email. So I think that's pretty good. So you don't get mixed up because there's a lot of emails once you get properties.
One property's okay, two property gets a bit full on, three gets more, and then you got to treat it like a business. So.
Yes.
Cool. Well, I'll come back shortly, Dinisha, with some questions about how you can help people out, and the community might have some questions for you as well, because I think about what you said, like starting about tell me about yourself to everybody, and like you literally there's so many people that are retiring, that are taking time back from their life that they'd be spending in a job and whatever. Like they have got there in the last 3 years, 5 years, 6 years, 10 years, and you've been a big part of hundreds of people's lives in order to get there, right? And I think that a lot of our team members and our colleagues here don't realise how much of a crucial role that you play on that. So lots of info there. Ask through for Dinisha if you have any questions in a moment, but we're going to get into some articles. Before I get into my articles, a lot of people are asking about the rental cap in Queensland. I've done a video on that. I don't know if it's gone out live, but that video, I've done some short little videos while I've been walking and doing certain things out there. But looking at the rental cap, a lot of people are worried and concerned that if you can only increase your rent once a year, what does that mean for you as an investor? Does it mean that you're going to be severely disadvantaged, whatever? I actually thought about it into great detail, and I think that it could be a benefit as a landlord. And the reason being is that if you think of supply and demand in the market, you've got X amount of tenants, X amount of owners, X amount of rental properties. If you've got tenants that are wanting to stay in their property, so they'll want to stay there for a longer period of time, that means that you're taking more stock out of the market, right? So when there's less stock coming in, and then the owners are like, okay, I'm going to put rent up now, they do more aggressive rent hikes. So you've got more people that are being forced to rent because they can't service to buy. So you've got more pressure in the rental space than what you do in the purchasing space. Then you've got less stock in the market because people are staying there for a longer period of time. And then you've got pressure from the owners putting their rents up at a more rapid rate. When it does come to that time, I actually think it'll put more pressure on the market to drag them up a lot higher and create, a supply and demand issue, which is pretty cool for investors out there. And it's something that we're seeing naturally anyway, happening out there, and it's exciting. So I'm going to ask you a real random question. It wasn't one that we're going to ask today, but I'm just going to put a little note here for when it gets there. Benefits of... Can I ask you about the benefits?
I have no idea.
I can't even read it. It looks like a doctor's script. That's what I wrote. Right? That's what I wrote.
What is that?
I don't know. Benefits of rental increase. Well, we'll get to that later, right? How does it affect your surfing? Think about that. Here's an article here. I don't know which one it came from. It's from Sydney Morning Herald or something. It says here, New South Wales Treasurer Daniel Mookie issues a grim warning ahead of June financial statement update. Residents have been warned of tough decisions as one state grapples with a once-in-a-generation cost of living crisis. Now, we never heard of a cost of living crisis. Probably, when was it, 2017? That was literally 2017 you came on board, right? I used to be very plain. I used to be on the TV, and you remember a little bit of that. But then you would have heard me going we're going to a depression, everything's going to crash, we're going to have a hyperinflation, interest rates are going to go to zero. You remember me talking about that? Everyone thought I was off my head, right? Even our own internal inside the business. Here we are talking about a once-in-generation cost of living crisis due to inflation, right? Let's go into this. It says here, New South Wales residents have been warned that tough decisions will need to be made, including cuts to government spending, so the government now is broke, as the state grapples with a once-in-a-generation cost of living crisis. Treasurer Daniel Mookie, or whatever, said he would be candid with the people of New South Wales when he delivers the June economic statement to Parliament on Tuesday before he hands down the 2023-2024 budget on September 19. Speaking to reporters on Monday, he said that the situation is serious with the government dealing with $7 billion of expenses, hard to avoid pressures. Among these included $380 million to renew contracts for 1,100 nurses that are expected to expire in 2024 and $700 million to build to New South Wales public sector insurance scheme, iCare. We've got to be upfront about the fact that the state's finances are facing some serious pressure. As a result, the government is facing serious challenges and there is no easy decisions ahead. New South Wales has not experienced inflation with a 7 in front of it since 1970s. You talked about going back into the 1970s, right? There's inflation not like 1970s before, right?
Yeah.
There's inflation not like 1920s before happening. And it's an exciting time to be alive. A lot of people should be very scared because I think they're not prepared for this, but I think at the same time there's lots of opportunities, and that's where our investors are benefiting from that at the moment and will continue to do in the future. This next one is the Treasurer lashes former wealth fund. On Monday, the Treasurer said he would be pausing payments to former government's New South Wales Generations Fund. Initially, the scheme was set up with $10 billion of government funds, including the $7 billion sale of WestConnex. The coalition government introduced to borrow an additional $23.5 billion by 2027 into the scheme's debt retirement fund to help pay off future debt. So just think about this, right? This one line, it goes, the coalition government intended to borrow an extra $25 billion by 2027 into the debt retirement fund to help pay off future debt. So they're borrowing $25 billion in order to pay off the futures. If that's to help pay off the futures debt, what's the future going to look like, right? If we go back to 1992 and you went in your time machine, and we went back to, 30 years ago, you would have seen that the whole country as a whole had $96 billion worth of debt, and we ended up in a massive recession. Here's just the New South Wales at $25 billion casually to pay off some debt to others. So how big is this debt that they've got? If we look at the Melbourne or Victorian government, they've got $150 billion worth of debt. This is not including the level of debt that the country has got as a federal level, and they've got over $1 trillion worth of debt. So if you think about $1 trillion debt here, $150 billion debt there, $100 billion of debt there, we're talking about it's just packets of chips now, or someone's property portfolio, here's $50, whatever. these things are really blowing out of control, and the level of debt that our country has got and all the governments around the world have got, these governments are now in trouble, and this is what's going to put pressure on interest rates to come back in the coming months. But I say coming months because it is not sustainable for us to keep going at the rate that we're going, which is cool. China's central bank adds liquidity via reverse repos. Beijing, June 13th. China's central banks continue to inject funds into the financial system through open market operations on Tuesday. So a reverse repo is basically the banks are purchasing their money between each other. The People's Bank of China said that it conducted a 22 billion yuan, about $279 million US dollars of 7-day reverse repos at an interest rate of 1.9%. The move is aimed at keeping liquidity reasonable and ample in the banking system, according to the central bank. A reverse repo is in a process in which the central bank purchases securities from commercial banks through bidding with an agreement to sell them back in the future. What that means is that some banks are bankrupt in China and the central bank has to jump in to put money in to keep them alive. And the repo market is a repurchasing agreement. So at the end of the day, when your bank closes up, they close up, and that's why there's like a 2-day lag for money to transfer. And like a system like Osco sort of helps that happen faster. But if we look at this is where the bank's coming in to purchase that because there's lack of liquidity in the system. Also note that if we look at all of the countries around the world, they're all going up with their interest rates. A lot of people are hurting at the moment, which is understandable, and that's where Dinisha comes in, and she can help you look at reducing your rates and all that sort of stuff. But all the central banks around the world are putting their rates up. China has just come out and they've actually reduced their interest rates, and that's because they have a strong, stable currency, where other countries around the world don't have a strong currency. So the currency is strong in China because they're producers, they're not a consumer. Every other country is basically getting credit cards to buy stuff, and China's making stuff, so the currency's going to them and they're not getting into so much debt. The thing is that's an interesting sign because we're starting to see a wave of interest rates going to a different direction in some instances. And this takes us to our favourite place in the world, Turkey, where they double their interest rates to 15% in a policy backflip. This article just came out the other day. I posted in the Birch feed. If you're not in the Birch feed, go and join up. It's free. You don't need to be a tight ass and spend money. People watching news and watching all these things, right? And watching Netflix and poisoning themselves with stupid content out there, and programming to condition themselves to fit into the world. I post articles out, I post videos and stuff like that where people can learn about the world that they live in and learn about the matrix and work out, how they can escape that by, learning how it works for starters. So it's free. It's just sign up. It's birchfeed.com. See, this article here is from Turkey. It says, if you thought Australia's interest rates were bad, wait until you see what's happening in Turkey. The nation's central bank on Thursday reversed years of unconventional economics promoted by the president, whatever his name is, and nearly doubled its key interest rate to fight inflation, steadied the troubled lira. So this is what to look at after our currency dies, right? A lot of people don't realise our currency is going to die, but it will. This decade, for sure. But the bank hiked its interest rate to 15% from 8.5%. So just overnight, it doubled its interest rate from 8% to 15%. And its first meeting since Erdogan filled his government with investor-friendly faces after winning the tight May polls. So he's literally in 1 month doubled the interest rate, right?
That's crazy.
But let's look at why it happened. It says it added that it's only started the process aimed at bringing Turkey's annual inflation rate of nearly 40% into single figures as soon as possible, right? They're saying that their inflation is 40% over there. So when interest rates go up that high, people are fearful what happens if it goes there. It means that your currency is dead, right? A Big Mac meal that costs, how much is Big Mac meal? I actually drove through a Macca's the other day because I don't eat that anymore, right? I haven't been to a drive-through for ages, but I drove through it just to see the signs on the board, and I had a mate in the car. driving through and they go, oh, can I take your order? I'm like, oh, sorry, I left my wallet at home. I'll be back in a minute. I'll just sit in here and look at this. I looked at the screen and like a Big Mac meal was like $13.85 and like all these things.
It's crazy.
Imagine when a Big Mac meal is $20 in another 2 years, right? It's not even real food, right? A Go Bucket at KFC is like $6.50, right? This is basic shit food for people to eat, right? And it's poison. It's just full of poison. Seed oils and all that. It's a different story. But that's what they're selling it for, right? So imagine when we see the Big Mac meal go to $20 to $30 to $40 to $50, it will have no value. The currency will have no value, and that's where Turkey's at. Turkey's more advanced than us. I reckon this is our currencies at the later part of this decade. We will see 50% interest rates. Turkey, like I think it was about 5 years ago, they put their interest rate up to like 60%, I believe, from memory. They put up to 60%. But inflation was like 100%. So if it was $2, it sold for $4, it sold for $8, it sold for $16, and it was heading into hyperinflation just like the other failed currencies out there. So monetary tightening, we'll go back to the article, monetary tightening will be further strengthened as much as needed in a timely and gradual manner until a significant improvement in the inflation outlook is achieved, the central bank said. Fitch Ratings said it is expected that the benchmark rate to 25% by the end of the year. They're expecting 25% by the end of the year. But the lira has still lost 4% of its value against the dollar due to investor disappointment that the bank had decided to pursue a more gradual rate hiking course. Not enough, they need to be front-loaded hike. Anyway, I'm going to leave that there and talk about the Aussie rate hikes and what that means. Actually, I'll talk about that in a moment. No, I'm going to talk about that now. So, Federal Reserve, this is the US Fed here. The Federal Reserve officials announced a pause in US interest rate hikes. Even with the pause, Fed officials suggest that further increases may come on depending on how close the economy gets to a 2% inflation target. So if you really think about it, why in the world should inflation exist in the first place, right? Like, why is it good that we're losing 3% of our currency every year, right? It's a silent tax that everybody's getting ripped off on. But they're wanting to bring it down from like 10% or whatever. Now just think about this. We've still got 7% this year. We still had 6% last year. That's not that it got back to where it used to be, right? It's just that, okay, something's gone up 6% last year. Now it's going up 7%. It's adding every year. It's a compounding effect. So if you had $1 and it doubled, and it doubled and it doubled and it doubled, there's these little things on the internet where you see it's on Instagram and shit, little reels. It goes, if you had $1 million or you had 1 cent that doubled every day for 30 days, which one would you take? And people are like, I would take the $1 million, right? But if you look at the 1 cent that doubled, it would be by the end of 30 days, just double it enough. It's a compounding effect. It's worth like $50 million or something like that, or $1 billion, whatever. And that's how this inflation is compounding on the system. So when you add all these together, it's a recipe for disaster. But they're saying that the Fed officials suggest further increases may come depending on how close the economy gets to 2%. US Federal Reserve officials have announced a pause on rates, leaving rates at 5% to 5.525 after more than a year of consecutive rate increases. The decision made by the Fed's Federal Open Market Committee, FOMC, marks a shift in how Fed officials view the state of inflation, which reached a 40-year high of 9.1% in June last year as the food and energy costs soared. Inflation in May was down 4%, the lowest since April 2021. So they're saying all these things like they're positive, but it's only down to 4% now for the month of May. The reality of it is that a lot of people think that interest rates are based on inflation, which is what they're saying. If we look at, I don't have a whiteboard here to draw on. I can draw on the wall and we'll have to repaint that. But the problem is that we're going to have, looking at interest rates, is that if the US increases the interest rate, what that does is it actually strengthens the US dollar. I've never seen any articles. I have not been able to collate or get you guys any articles at all whatsoever from any news source that says this. Do the mathematics on it. If the interest rates in the US were to go up, What that means, it means that the US dollar becomes more stronger. The US dollar will go up in value. So if we're trading at like 67 cents, it might be 68, 69 cents or 62 cents, 50 cents, whatever. So the more that the US increases their rates, the lower the Aussie dollar becomes. So if we increase our interest rates as well, it means that our Aussie dollar stays equal par to the US dollar, right? At whatever rate we're looking at. So on that note, if we didn't increase our interest rates and our dollar lost its value, what would happen then is that we have to purchase, like it's written in law and you have to trade in US dollars. So everything that we go and consume, which we consume nearly everything here, we would need to go and buy a US dollar for. So we would have to trade to a US dollar, buy the oil, buy anything, whatever it is that we're trading in, commodities, buying a bloody sweater from China or whatever the case may be, right? My jumper's like similar to yours. It's blue. So everything we would be buying would go up in value, which would cause even greater level of inflation. So we are forced to move our rates up in lockstep with the US when they increase theirs. Otherwise, our currency will lose value and inflation will run more rampant out of control. So interesting to see that the US is starting to control that. But at the same time, if the US dollar dies, our Aussie dollar is connected to it, right? The only way for us to stop this is if we took our currency away from US as a trading partner, which that currency is doomed. I said this 12 years ago to a mate of mine that's in America. Our first staff member here, he's a guy from America now. He was our first staff member, went over to America. He's pretty successful over there. And I had this discussion with him. Like, I hate America because like the dollar will lose its value and all these sort of things. And it's happening now. But if we moved our currency and backed it based on the Chinese yuan, it would be more stronger and it would be more better, and we wouldn't have these disruptions. We could probably play around like the China. You notice that the Chinese yuan is reducing their rates because they're in a better position than us. So interesting things to look at and calculate. Someone here said, Nathan, 1 cent compounded for 30 days is 5,368,709.12 cents, right?
It's already calculated.
It's already calculated. Thank you very much for that, Brendan. So the thing is that it's the compounding effect of all these things, right? We've got the compounding effect of rates going up, we've got the compounding effect of liquidity being sucked out of the system for businesses, for households. This is not going to end pretty. We haven't looked at what's going to happen in a year's time or in 2 years' time. We are in for a lot of pain. People don't even realise. When they drop the interest rates, that'll be the least of people's worries, right? Inflation will be surging. Imagine, they can't even control inflation. Now they're pushing up the interest rates and inflation just keeps running rampant. Imagine when they drop interest rates again because they've screwed the economy. It's like, have you ever seen the movie Face Off?
Yes.
Smash up the like if you've seen Face Off, right? You've got John Travolta, Nicolas Cage and some other gangster, right? And they're holding guns, right? Three of them, whee, what a predicament, right? If one of them shoot each other, everyone dies. So that is our economy right now. So on the back of that, I've got my last article here, and then I'll get into asking Dinisha some questions about finance. This is a very fitting one. It's an article saying Westpac unveils major changes to debit cards, including a $1,000 withdrawal limit. So our currency is dying right now. They are trying to control us by taking our cash out of the system. I've talked about this offline a bit. If people want to have one-on-one discussions with me about it, I'm not going to put it out there because I'm having a bit of fun out there with the banks at the moment. No one even knows. You don't even know what I'm on about, right? I'll tell you afterwards, right? One of our viewers, he messaged me and he knows about how currency works and whatnot. He's like, why did you say you go to the bank and perform this specific task every day? And I'm like, I'm glad someone picked up on that question, right? And I explained it to him. He's like, shit, that's mad, right? But I don't want to shoot myself in the foot because I'm having a good, fun time emptying the banks, right? I'll leave it at that. But the banks, if you go and look at the banks out there, I go to the banks, maybe 10 banks a day, 5 different locations, right? I literally go and visit banks, right? And I'm seeing that the banks are falling fast, right? They're dying, right? So I went down to Balcombe Hills the other day, and there used to be a NAB, a CBA, a Westpac, a St George. There was all of them, right? There was like 7 of them in a row. There's 2, right? And this in a period of 6 months. I went to Parramatta, right? Parramatta, Sydney, second CBD. They're merging all these banks together. There's vacant ATMs in the walls, right? I go to service stations. I have a lot of tradies that want cash, right? So when I have to go get cash for them, it's like rare, it's only handfuls and stuff, but still I've got so many things going on, they want cash. So I go down to the servos, and I've realised that they've removed all the ATMs from the servos as well, right? So for you to be able to get in and out of the financial system, you can't. There's no way of being able to use cash. So if there's a run on the bank, if we go to negative interest rates, if we have a hyperinflation, they can control the currency by allowing you to only take X amount of dollars. So how they stopped Greece from blowing up, they put a $200 a day limit on people's ATM cards and they couldn't get that out. But if inflation's so high, what are you going to buy with $200? What are you going to buy with $1,000? You can't buy shit, right? So we're now in a position where the banks have taken away all the on-ramps and off-ramps apart, and they're forcing us, third line forcing us to be able to use their money in their system. Now, if there was a bank run...
It's like yesterday, CBA had a...
It was down the back.
Yeah. And it was like on news and everything, and it was like a major issue, and nobody could access it, and no one uses cash anymore, right? So like...
Exactly, right? Exactly. What's this one say? Go to the club or pub, but you have to pay a fee. But you can only pull $200 out of those ones, right? Those next ATMs and whatnot.
Unless you ask like cash out, like.
But they won't let you. You go to the bank, you ask for $5,000, they won't give you $5,000, right? They say it's for your health and safety. They say, what do you want it for? They tell you how to use your banking app. They, all these different things. It's like, I want my cash. But when you put your money in the bank, it's no longer your money. You are accredited to the bank, right? If the bank goes under, you're accredited to it. So if there's no way for you to get out of the bank, the money's always trapped in the bank, that means it's never yours, it's always out of the bank. It means that there can't be a bank run. So they're stopping the banks from having a bank run. Well, there's very limited things that you can do, right? There's very limited. You'll laugh when I tell you about it, right? I'm going to tell you offline, right? I'm going to tell you about it offline, right? But if people have a question, you can ask me through, send me a text, I'll tell you, right? But like you pull out, let's say you pull out $1,000 out of the bank, you put it in under your pillow, right? That $1,000 a year ago could have bought you a lot more shit than it could today. And that's why I want to get rid of my cash as much as I can. And I want to get assets that are bringing in cash flow, yeah? But it's impossible to do that because it's making it harder and harder. So I've always talked about precious metals and copper and silver and gold and all those sorts of things, but it's now becoming more and more evident to have control of that. And it's a bit hard to carry all that stuff around. There's all different things that you can do to protect yourself. But yeah, this is very, very common. This is very, very bad what I'm about to read you guys, because I don't think anyone really understands the impact of this. It says here, the major bank's decision to enforce lower default cash withdrawals limits customers after a survey found that 72% of Australians were found to be low on cash users. Right? Because no one has cash anyway, because they're all using the bloody credit card. Westpac has unveiled major changes to how customers use their debit cards, enacting a $1,000 default cash withdrawal limit amid dwindling levels of cash withdrawals used across the country. The major bank will also cap transactions limits to a default of $8,000 when selecting a credit payment. Currently, users limit when tapping, inserting or making online payments with a debit card is their available balance. So if you want to go buy a car, you can't use a car, right? You can't transfer that, right? You have to go and beg, can I have the reason because I want to do this, this, this. You have no control over your life.
So you can't just go buy a car with
credit card? No. So you've got an $8,000 a day limit. And Mel just said here, 15-minute cities. Yes, they're trying to control us with these cities and control grids that are around us. If you're dependent on the system, you're in control by the system. So you want to get yourself control of yourself and not be a slave and mercy to this system. It's very bad, right? This is communism at its best, and they're bringing it to your household or your suburb where you live. This article goes on to say this comes after the RBA found on June the 15th There's been a sharp decline in cash transactions across the country. Most Australians use cash infrequently, but the RBA's cash use and attitudes in Australia 2023 bulletin read, indeed 72% of Australians were classed as low cash users in 2022, using cash for 20% or less of their in-person transactions, compared with 50% in 2019. The number of high cash users Australia who use cash for 80% or more of their in-person transactions now constitute as only 7% of the country's population. So they make it hard for you to use cash, because when you go to Woolworths or Coles, you're forced to use one of those stupid machines. I never know how to use them, so I always forget things and stuff. Anyway, it's a different story. Right? They didn't train me on how to do it properly, so I don't know. But they force you to use the card there, right? These big organisations, they said in Bunnings when you had a health crisis that you had to use a card. They were not accepting cash. So in their statistics, they've manipulated their statistics by forcing people in third line, forcing them to using electronic means of transaction. When I go to the banks, I do get cash out. They try and tell me we don't hold the cash because of health reasons and corona and all these things.
They don't have
they don't have physical cash, right? If you go to get coins, the bank will say, oh, we've only got $150 worth of coins. Like literally, they go and bring them all out. They've got nothing. They're empty. They're bankrupt, right? They're bankrupt. The banks are bankrupt, right? So, yeah. It goes on to say, survey of 40 countries, Australia was found to have the lowest cash usage rate in the Asia Pacific region in 2022, with cash payments representing just 6% of the point of sale transactions. This was followed by New Zealand at 7%, China at 8%, and South Korea at 11%, who have all widely embraced electronic payment systems. So in China, if you walk across the road and you're jaywalking, the light's green, not green, it's red. By the time you get to the other side, your photo's up on the TV screen on the wall. Your biometric camera's already checked you out and said you're a bad citizen. They've deducted your money by the time you enter the other side of the road, and your money has disappeared from your bank account. So people are going to be trapped into this position, and that's what I've been saying for a big time, that you need to take control, whether it be your food, your energy, your water supply, having access to everything to be able to live life on your terms. Yeah, so it goes here to say, under current federal legislation, all businesses must submit a threshold transaction report, a TTR, when providing service that involves a transfer of $10,000 or foreign currency equivalent. TTRs are enforced by the government to help detect and disrupt criminal and terrorist activity. No, we just want to know that we can have control over our life, right? They're treating us like terrorists, right? It's like, why do you want $5,000 for? I want to go and do whatever the fuck I want with my money, right? But it's not. It's not. So I always make sure if I'm doing online transactions and I'm making them like 4,900 or whatever, and I send multiples of them over to people, because then I keep the radar of things. So, yeah. And also transact as businesses, not as individuals. So PTY, LTD positions are much better than, people's personal. So connect. I don't have a mobile phone. My businesses have a mobile phone. So it's like, I don't own cars. My cars, my phones, and that, they're not mine. They're the business. And
so you don't have a phone?
No, the phone that you text me on, call me on, that's under the business. Yeah, so I don't know if someone's taken my phone. It's just a business phone. It's like a walkie-talkie. Someone picked it up, right? So it's important to try and protect yourself along the way, because it's a dangerous world that we live in today. And anyway, talking about the dangerous world, they talk about misinformation out there. I think that the most misinformation comes into the financial world, because that's what I understand. I see there's lots of lies and things out there. Topic of discussion today is about finance and how to prepare yourself for when fixed rates expire. There's a lot of people talking about a mortgage cliff and potential of people being in a lot of trouble. I think there's about 27% of Australians are in fixed rates compared to the rest. A lot of people are now paying higher rates anyway. So I don't think it's a big thing, but there is people going to be hurting, and I see them going, I've got a 2-year fixed rate, a 3-year fixed rate, and it's paying 2.19 or whatever, and now they're going to be paying 6.5% or something like that. So I guess, how can we prepare ourselves for that?
Yeah. So because it's a big jump, right? Like when you fix those rates, that 1.9 and then the 2%. So when it comes, once you go to a revert rate, which is not like a discounted rate that the bank gives you. It's the standard rate. So for example, if their standard rate is 7%, and we usually brokers, we give a discount for clients who's on a variable rate and all
what
that.
sort of discount can you get, like up to? Like what would be an average discount? Or what can you get up to if you're a big fish?
I think I can get up to 2.62 discount, so probably about 6.57.
So if the standard variable rate is like 8.5%,
they're like 8 to 9.
So the standard rate's about 8 to 9%. You can get a discount of 2.6, which brings it down to like the 5.5, 6% or something like that. Yeah,
it depends on the banks and everything, but those are the discounts.
So if you were to do that, but if you were to fix your interest rates and then come off the fixed interest rates, you would lose that 2.62% type thing.
Yeah, you straight go to the standard, the highest, yeah.
So a lot of people have been fixing the rates, thinking that they're going to save a couple of bucks, come out the other side and cop a banana from two perspectives, because they're paying a higher rate, but then also losing their discount on the other side. So when you're taking a bet against a bank, you're not going to win. Unless you're really smart about it. What we need to be.
So I would say, you can negotiate with the current lender that you're in. Say that you're an existing customer. I would like a better rate. Going to variable. That's one thing you can do. The second thing is also you can talk to your brokers, or if you don't have one, you can talk to us, and we can compare the rates, with a few different banks and see which is more suitable for you. And I would say that don't start, if let's say your fixed rate is expiring in 4 months, don't wait for 4 months. Just do it now, so that you don't have that shock or that that crazy amount from jumping from like 500 to like double or triple the repayment.
And a lot of people might be like, because now the interest rates have gone up 4% on top of what they were paying, they don't service for their mortgage, right? And the banks are still calculating a 3% increase.
The buffer on top of
whatever the rate is. What could people do to help themselves in this period?
Like in terms of,
like, you can refinance, but like, could you renegotiate? Could you, like, what happens if someone's trapped? Like, what options are there for people that are...
you don't have to always stick with that one bank. That's why you come to us, and we can review your position and see which bank is more suitable for you and what your borrowing capacity is. And then based on that, we can refinance, whether you just want to lower your rates and stick with variable, because fixed rate is so expensive now. It's still higher than variable rate.
If someone fixes, like me not giving financial advice, and Dinisha definitely not giving financial advice, because she can't give you financial advice. I think if someone's fixing their interest rates at a peak, at an absolute peak, they've got rocks in their head, right? They think they're trying to protect themselves and stop the rates from going up. They have no idea how the economy works. They have no idea how financials work. And I think a lot of people don't realise, like, if you're paying like 6%, 7% or 8% on your interest rate, that is like worse than being in 1992, right? In 1992, they go, interest rates were 18% or whatever. An 18% interest rate on your 200 grand mortgage was like $36,000 a year, right? 3% interest rate on your $1 million mortgage today is like $30,000 a year, right? An 8% interest rate is like 80 grand a year. It's relative, but an interest rate of 6% or 7% or 8% is like 1990s at 18 or 20%. And people aren't looking at that, and they're freaking out and going out there and fixing rates and doing silly things like that.
Talk to us. We can help you out. And then see what else you guys want to do as well. But I would say first talk to your current existing lenders, and if they can't do anything, then talk to us.
I was chatting to one of our VIP clients, and he'll be watching this. I'm going to write his name here because you were just on holidays, and I was talking here, and I was like, look, let's look at how we can cut some costs and stuff like that, and we're able to push his rents up by about, I don't know, 700, 800 bucks a week. And I sent him off to go and speak to his banks. I think he's got about $3 million worth of debt roughly. And he was able to get 0.5% to 1% off on about 80% of his loans. And he went to like 4 different banks, and I think 3 of them gave him discounts just by asking the question of, hey, you don't need...
And you can also, like, if you can also ask your brokers to give discounts for you. Like, you know, they can speak to the lenders. I've done that with a few of my clients. They've, you know, they wanted to reduce the rates. I've spoken to the lenders and got them discounts as well. So
there we go.
And we can also done that, and
I've seen Zinger, like you guys, having clients which, you know, their rates have gone up, they're in a shitty position, and I look at their portfolios when I'm doing the portfolio reviews. I'm like, your position is actually better because you've pushed your rents up. Like with the rates going up, it's given the opportunity. Like if it wasn't for interest rates going up today, there'd be interest rates have risen. There's less people being able to service the properties, so it means there's more renters in the market to rent properties, meaning there's putting more pressure on the rental market, meaning that those rents are going up. With those rents going up, if you've got $1 million mortgage and you've got $500 a week rent, then you're kind of screwed, right? But if you've got a $200 mortgage and you've got $300 a week rent, and the $300 a week goes to $400 a week, that extra $100 is far exceeding what the interest rates are going up by. So with the balance of the interest rates going up and being able to get higher discounts on it, like going back 5 years ago, getting a discount of 2.6% was like, it wasn't a thing. It was like getting a 7.7 or getting a 0.11. The biggest rate cut I got was a 1.1% discount. So
I think the when the interest rate also was increasing, the banks were also trying to up their discounts as well. So which is good.
And there's options there for people to be able to take advantage. I guess in this sort of market. What sort of differences are you seeing between different banks and the rates between different banks? Like, is there big discounts to be had out there at the moment, or?
So with the, like, I would say mainly with the bigger lenders. With the smaller lenders, you can try to negotiate to get discount, but usually they're fixed on their variable rate. But with the bigger lenders, as I said, like the difference, for example, with CB and ANZ, you know, CB would discount something about like 2.3, 2.2, where ANZ is like 2.6, 2.7. So like, so, and it really depends on your position. So everyone is different. So on how many, you know, how many properties you have, how many like liabilities you have, and everything like that. And it also depending on what you want to do. Not necessarily, some people just want to get out of the fix. They also would want to try to release equity from fix, because when you're fixed, you can't do anything. Like you can't break the, you know, contract and stuff like that. So
and I guess on that note of equity, like when Dinisha sees me in the office, she's like, no, it's like she can't run, right? And I feel like she puts the phone, it's like running. It's like she puts the phone to me, it's like, I'm going to call whoever I can call, right? Because I walk up to Dinisha and you can probably tell a bit of the difference in height and stuff. But it must be like very scary when I come around. I'm like, Dinisha, I need some equity. Who's got equity, right? What are we going to do for some deals? And I always pushing. You're very proactive on it. You surprise me because you're coming to me all the time like, oh, Nathan, I've got equity for this person. I'm like, what about this one and this one and this one, to be able to get more equity for them? What's equity like in the current climate? Can people still get equity? What sort of equity are we getting out, etc.?
Yeah, I mean, we still have pretty good equities. I've been releasing equity almost every day.
There we go, give me some names.
So like, for example, like a client just settled a month ago. And I did valuation just probably less than a month, I would say like 3 weeks. And 30,000 equity.
Have you given me the name?
I have, no, I swear I actually have.
Okay, great.
I have.
Here we go. So a month. So someone buys a property and they put down 50k or 40k and they're able to pull out 30k in a month.
And that's like, you know, getting another property already.
Exactly.
Yeah.
Yesterday was very fruitful, right? I came in and I had a chat with all the team at Zinger and I was like, who's got equity? And I sat there afterwards and I was like, wow, I've got like 15, 18 different names yesterday from everyone.
But can I say something?
Yeah.
He's very ambitious, so it's like, it's so annoying that you come and ask. Like sometimes, you know, I just want to make sure like I'm prepared. Like the clients, you know, I get clients loans. I just want to make sure that okay, they are, you know, good to buy a property. And then here you are just coming in, and it's not like I can't say no either. Because you look at me and then you're like, yeah, you have it. What is it?
What have we got? And that's how we build the portfolios. So like you're here, like people are watching this thinking, people would be sitting here watching this, don't know us, thinking that A, we're crazy, more specifically me, but they'd be thinking, you buy a property for 200 grand. Firstly, that's stupid. You can't buy that, but we do. We go back, pull out equity a month later and get, you know, most of the deposit back out to buy another property. That's crazy. It's unheard of. Like, these are all things that are very important and crucial to an investor's journey. Like, it's not by chance. Do you think it's by chance that an investor would end up with 10 properties, right? It's very hard to get that. Very hard.
But you know, I have conversations with our clients about you.
Really? Well, no, not Nathan. Stop emailing me.
Like I had this client, I was talking to him, and he was telling, oh, okay, this is your position, this is how much you can, you know, potentially you can release, and and the client's like, I don't know, Nathan's sending stuff every day to me. You know, and I'm like, I know, he's chasing me about you too. Yeah, just it's okay, you know, it's between you and I. Don't worry about Nathan.
Yeah, look, but that's how we get there,
like,
right?
Yeah, I mean, at the end of the day, you know anyway. Yeah, about the client. And
I calculate, right? I know when I'm buying an asset, what it's worth. I know that we've run our valuations. I know if we're buying 2 properties in the street, the third one in the street would have to be in that sort of range. We're picking up this price as equity in that.
Yeah, no, I understand why you do it. You don't want to lose the opportunity, and you want to make sure that client get the right property and grow the portfolio. But the finance side, it's a bit different.
I've got a question for you as well, like just on valuations, right? And this is just like...
You're just not going to let it go.
No, this is just putting you on the spot about something different, right? Like people out there would be watching the news, right? Well, they wouldn't be watching us because they're probably, you know, handicapped by, you know, believing everything the media has to say. But they go watch the news and they get told that, oh, the market's crashing, this is crashing, whatever. But you are in the trenches. You are making the loans happen. You are a part of that market that's, you know, that people don't get to see every day.
Yeah.
And based on what you're seeing with the properties that we've been buying, are the properties in the market, are they going up or are they going down or are they staying stable?
From what I can see, they're actually going up. This is based on like equities that I'm able to release.
Exactly.
So, I mean, if they can release equity, that means you know that the market is increasing, right? And I think it really depends on the property that you're getting, if I'm not mistaken.
Well, there's markets that we've been very heavy in, and we don't talk about them online.
No, we don't.
There's a couple, right?
Is this for me?
No, this is just for random, right?
Okay.
Just for you. These properties, say 200 grand property are now 300 grand, 150 is now 220. And this is in the last 3 months or 4 months. So like there's literally market, they talk about inflation going up. We're seeing inflation going up in these areas that we're buying that are going up like 20% in 6 months. And that's,
Yeah, that's very good.
Cool. I guess any other tips and tricks that you can tell people or things that people might want to know about in the current market? Everyone's concerned about interest rates and all that.
So fixed rate, I think we've spoken about it. The next, I think, like properties.
Okay.
Right. So there are banks that have policies in certain properties.
Yeah.
They, you know, I don't want to say too much because it just depends on the property. But like whenever you want to purchase something, banks have a certain postcode restrictions on the properties that you're buying. So I can say an example, like, you know, like in a, can I say it?
in a mining area?
Oh, we don't say, we'd say just in a mining area.
In mining area, like, you know, banks are just a little bit more restricted on that. So there could be a certain policies restricted. However, with that being said, it's not that you can't get it. It's just that we just need to follow the procedures, the process and the policies of the bank. So just before, I guess, like knowing you know, the property that you're going to buy, just come and talk to us, I guess, and see, you know, what's acceptable and what's not acceptable.
I think what's a good investment is, like, if you're buying, like, you want to find the opportunity, right? You want to find the opportunity. And if we look at areas, like, if people can't have money to buy, well, then there's less competition there, right?
Yeah.
So if we go into an area where there's a policy that's against that location at the time, well, then that's going to mean that there's less urgency and competition against those buyers, meaning that there's greater opportunity for a negotiation. Yeah. And some areas, like Denisha's scared of saying locations. We don't talk about locations there.
But we are talking about finance, so you know, that's what we're talking about.
Yeah, of course. But like, if we look at, like, I'm going to throw out some locations. Let's talk about Surfers Paradise.
Yeah.
Gold Coast.
Yeah. That's pretty good.
Harris Park. Yeah. Parramatta in Sydney. I can see that Mike's here and he says that Sydney is king. He loves Sydney, right? He's the king of Sydney. And he's, if we look at those locations, going back in 2020, what was it like? You actually bought in Parramatta, right? Yourself.
Yeah, I bought in Parramatta.
That was a high risk, right? They wanted 30%.
Shit myself.
No, I mean, like, with everyone's properties, they wanted like 30% deposits.
Yeah.
Like Harris Park, all those locations around. Yeah. But they're back to 80%.
Yeah, so it changes, not necessarily, like, I mean, not necessarily it will stay the same. Yeah. But there are, like, certain times there are policies. Cycles, there are cycles, you just need to double check. Yeah.
South Headland, actually, this is a place, South Headland, that's in far north Western Australia. It's an iron belt, and everything in South Headland is red, right? All the dirt is red. There's like high winds that come through. It's above the Tropic of Capricorn or whatever it is, Northern Australia. It is. It's a line. It's a line that goes through the middle of the country, and anything past like Geraldton and anything past, say, Gladstone on each side of the country above is like, it's like a high wind cyclone sort of territory, and it's in the tropics, and then in South Headland, they had townhouses that were like $600,000 a piece, and then the market started to turn, and the bank wouldn't lend there. So the CBA and all these banks wouldn't lend in South Headland, and the prices went down to $50,000, right? And the rent was very low, and people going bankrupt. So the bank had a high risk to it. They just flat out refused to lend at it. So the prices came back from 600 down to 400 down to 300, and when they stopped lending, they stopped lending completely out there, and the price went to 50 grand, so you had to buy cash, right? But that only lasted a few years, and that's when we started loading up properties in those locations. So now those things have gone back to 300 grand, and we bought them in the 60 grand or 50 grand, and they're renting for like $800 a week. We saw the opportunity because the banks there was no liquidity in that market because the banks weren't lending. So it meant that the owners, if they were desperate enough to sell, they'd come to us and would pick them up for pennies in the dollar. And same thing with the Gold Coast. Like when Corona happened, like we saw the largest boom ever in the Gold Coast occur in the last 3 years. But in February 2020, it wasn't the case. Like you couldn't get loans because the banks just flat out, refused and maybe put down a 40% deposit or a 30% deposit. So lending restrictions, be knowledgeable when you're buying a property that, your area may be screwed for a year or 6 months or 2 years.
It changes time to time, so it's not necessarily
forever.
Yeah.
Cool.
I have a question for you.
Sure.
So you know how you source, I guess, like present properties in Queensland, Sydney, and New South Wales and Western Australia?
Yeah.
Why not other states?
I buy in all different locations. I bought in Adelaide recently for someone as well. But I bought something the other day
like
in
Melbourne,
Victoria. Yeah, I buy occasionally in there. I bought one a couple of months ago in the CBD of Melbourne, and it was like 5 k's from the CBD, a 1-bedroom unit, everything was selling for 300,000. We picked up for 150. It needed a total gut job and rip out everything, put it back in. But that was good value. But I just don't see good value in these locations, right? And I saw value in the Gold Coast because it had a lot of intrinsic value before, and that's why I bought there. But now something that was 200 grand went to 600 grand. I don't see the value there anymore. So that's why I'm very much into other locations. So I'm seeing good value in Sydney at the moment. If you put Sydney, Gold Coast, Brisbane and Melbourne together, 5 years ago, Melbourne was a similar sort of price to Sydney. I'd rather have Sydney. And Queensland was like a third of the price of Melbourne. So it's like, you can literally, if you drive from Melbourne CBD out to New South Wales, you could keep building for the next, the whole way, all the way through. So it's not like that they're confined by anything. If you look at Sydney, you've got the Sydney Basin, which is all by national parks. So if you want to go anywhere else, you have to go upwards, so the land's disappearing and whatnot. And there's a lot less property in Sydney per head compared to Melbourne versus the amount of people that are there. I think that there's better value. It's not saying that it's the worst place in the world and I hate people from there or whatever. I don't invest in a Canberra because there's a lot of commies there, just because it's all government stuff. And the land is leasehold land, so it's not actually owned, so you don't own the land. So, and the same thing with Northern Territory, but those two locations are very expensive and they're way overvalued. So I just don't see the value in it. I don't like Tasmania because it's not attached to the mainland of the country. Brings up a sort of elements of risk attached to it. And I just think there's better value. When people were buying in Hobart, I was buying in Perth, right? And I just see there's better value out there. So if there was better value in Melbourne, I'll be buying there. I'm just not seeing it. I personally own a handful of properties in Adelaide. I bought them. They did nothing for a very long time. But they've gone up and they've tripled in value in the last year, and that's been okay. But if I look at the price of buying in Adelaide, I could buy in Brisbane for the same. Population of Brisbane much better, and all that.
Yeah, I wanted to know because when I first started, it was just Queensland and Sydney, I think.
Yeah,
and then slowly, expanded. So.
We used to do new builds. We used to buy brand new properties as well, like the bulk distress sale.
The
problem is
land and build.
Land and builds, But then the problem is the builders were all going broke. The cost of construction was going up. The finance market didn't allow for it to happen. And it just wasn't the right thing. So,
I remember.
But we want to follow where the opportunity is, and there's always an opportunity, and that's just that. With loans, like, is there anything else that you think people should know about, or we should be discussing? Anything about trusts or personal name?
So I just want to, put it out there, like what we actually do in Zinger and why we are a bit, different to other, where if it's directly to a bank or if you're using other brokers. So for us, writing loans is like bread and butter for us. Like every day we actually hustle and write loans. There's not one time I don't write a loan. So for us, constantly we launch, and write applications, whether it's a purchase or refinance or SMSF or construction or buying a principal place of residency. So and what makes us different, because we write loans every day, we have different scenarios and different finance positions every day. So we're just not sticking with one topic.
Strategy.
One strategy. We always have 5, 10, 15 different strategies. So we don't write just for investors. That's what I really want to bring that out there. We also write for people who want to buy a house or want to buy under their self-managed super fund, or even even what you were saying, talking about land and build, but we still do land and build if you have anything out there
for finance. We
for finance,
don't buy it because people buy and then want us to do building and stuff like that. So one other thing, there's two things off the back of it that I want to comment on. First one is that there's 15 staff in Zinger, like roughly, I don't know, 13?
13.
Yeah,
13,
we've got a few more coming on. But anyway, you go to a broker, right? You go to a bank, there's one home loan manager that goes to 5 different banks, and they're shared between 5 different banks, right? So that's your HFM, your home finance manager. You go to a broker and you've generally got 1 or 2 people working in the brokerage firm, and that's what they deal on. So if they get caught up with a scenario, well then they don't know how to handle it. We've got Rose, which has been doing it for donkey's years, 20 years, and then we've got a dozen other staff in the team, which have all had different areas of experience and have come across at different scenarios. So if you have a problem, Dinisha, and you're like, hey, I haven't seen this one beforehand, you don't just go, okay, I can't help you.
No.
You would workshop it with your team. And then someone else in your team would be like, hey, what I would see is I had a client that had 1, 2, 3. So you've got like a dozen different people overseeing your file as well to be able to help you, which is very important. On that note, like I was talking to one of your team members yesterday, and they're very excited because I know that we have lots of New Zealand viewers on here, right?
Yes. Yeah.
And you just settled, this is 2 things, right? You haven't talked about, you haven't given yourself enough praise about this, right? You got someone that's not even an Australian citizen, a firm deal, right? That's not even an Australian citizen, you got them into a property. We have got someone at the moment which, like, people watch this from New Zealand and they think, and this wasn't from a New Zealand person, but it's from somewhere else. But we've got a lot of people from New Zealand that don't know that they can buy properties in Australia. And the ability to get loans is quite complex, but Zinger specialise in that. We've got lots of people that we help out there. We're actually getting loans for self-employed people. You said before, we help people with trust, we help people with this, we help people with that. Self-employed, we help so many self-employed people, and they find it very difficult to be able to get loans.
80% of clients are self-employed.
Really? You reckon?
Yeah.
80%?
Yeah, the amount of people that are self-employed, like they go PAYG and then they are also like starting a business and stuff. So I would say 80% to be honest, self-employed. Yeah.
I thought it'd be like, maybe it's your portfolio, I don't know. But I would have thought maybe like 30% self-employed.
Oh,
no?
Who doesn't know? 80%.
So then we've got people from New Zealand which are coming to us and getting loans drawn up which are for self-employed. There's no one out there talking about it, right?
Yeah.
There's
you
all different strategies.
You can get a property here. Like if you guys are from New Zealand and you want to buy a property here, like please come and speak to us. And there are products and there are banks out there that can cater that for you. So we just need to speak to you, know about your finance position, and then go from there.
Yeah. So there's all different aspects of it. I noticed that someone just wrote there, for someone starting to invest, do you recommend buying properties in a trust or in their own name? Zinger never recommend that because they're not financial planners or whatever.
I mean, we can tell you the benefits
of finance.
Like if you were to purchase under a trust or a personal, what are the benefits?
Yeah.
And like, I guess advantage or what are the disadvantage, but we don't recommend, like, as in we don't
make advice on that.
Yeah.
But like I always give non-financial advice and people go, oh Nathan, I know you don't give financial advice. I'm like, well, I just talk about whatever when we're having a conversation. But for all the commies that watch this and they're like, oh, we'll get Nathan on some compliance method. I don't give financial advice, right? But on that note, like it depends on your situation, right? Like I found that the large portfolios that we've got, okay, here's a question for you, Dinisha, that might help answer this question. You have like hundreds of investors and they've got like large portfolios. Let's say the ones that have like 20 properties or 10 to 20 properties in their portfolio. What percentage of people with 10 or 20 properties in their portfolio would have them under trust?
Like, I don't know, like I would say like 2-3 out of 10 properties.
So 20%.
Yeah.
Yeah. So there's pros and cons to it. I've always been more along the lines of trusts are more detrimental to have under a trust having the property because then all your income gets trapped in it. There's pros and cons. But for some instances, we've actually found a little niche market out there.
Yeah, I guess this is win of the week for me.
There's niches out there, right? Niches and niches, right?
Yes.
There's a niche market out there, and we might actually get someone else on your team as well to come and like for a whole episode of this, because it's not really what today's about, but to talk about like the benefits of doing it under trust, because there's a little window for some people that it can be much more beneficial. And I don't know your story, so you talk about your story out there and your win of the week.
Oh, you want me to tell?
Yeah, tell. Yeah.
So we have a client that who wants to buy property under trust, and despite their finance position, they were able to buy 2-3 properties under trust, no issues with that. But when interest rates were rising, it impacted their situation. So then they couldn't buy properties under trust anymore. So then they wanted to buy properties under personal. So what we have done, we have policies out there where if you are planning to purchase property under your personal name, you don't have to declare your properties under your trust. So you don't have to declare your mortgages.
So that's in short what a whole new episode
that's
life will be about.
But,
we might do a webinar on that. Let's do a webinar on it, because it's a very exciting topic. Yeah. I think that playing the bank game, right? Everyone thinks that the property game is about, I've got to get the best property, I've got to do this, got to do that. That's important. That's what I do. I make cool deals happen for people, and we buy properties that are cheap. Actually, one of the win of the weeks that I heard from your team is random. One of our investors started with like 200 grand or something like in January. I got her to 10 properties so far this year. And I just revalued a property we bought in Sydney for 320 grand to 518,000, which is Daniel from your team's client. And we've been able to get like 200 grand equity out within a month just from that one deal. And then we know that one deal does it, then we go, okay, we can go back to all the other clients that have got that and get an extra 200 grand out. But we need to play, everyone thinks the property game is what's important, right? It's the finance game. Because if you don't have the money, you can't do the deal. It's how Dinisha gets that money for you, and how you present yourself to the bank. And like everyone thinks, like I would imagine, Dinisha, if we went down to Long Bay Jail, right? Down to one of the big jails in Sydney, Silverwater Jail, whatever.
Which I don't want to.
Yeah, we just go in there and see some people. No, we don't want to go to jail. No, none of us want to go to jail. No. You never go to jail, you're right. We don't do that. But like, if we went down to a jail and interviewed some people, right? Let's say they pulled them out. They go, we don't want to see the murderers and the, whatever. We want to see the bank robbers, right? We want to go see the bank robbers, right? There would be just seeing text messages coming through from people who talk about specific things. If we went down to the jail and asked to speak to the bank robbers, right? Mm-hmm. And we put a couple of bank robbers in there, and they're like, oh yeah, and we asked them, how did you get the money from the bank? They're like, well, we went down, we had a fucking sawed-off shotgun, put our wife's stockings on our head, and we said, give them all your money, right? There'd be so many dickheads down at the jail that would rob the bank, right? Reality of it is the bank wants to give you money. The bank, A, is broke, right? They have no money, right? They don't have any money, so don't think about robbing a bank, right? You're going to end up in jail, it's stupid. But the bank has money they want to give out, right? The business of a bank is not to hold your 5-cent pieces and your 10-cent pieces and give them back to you, right? That's not how they make their money. They make their money by lending you money and printing money in circulation, right? And brokers help out that and all that sort of stuff, right? So in reality, the bank wants to give you all their money, right? You ain't walking to the bank saying, hey, give me all your fucking money, you piece of shit, right? That ain't how it works around there, right? It's like you go to a club on the weekend, you try and meet a girl or something. I'm just making this up, Dinisha. Like, Dinisha remembers me a long time ago. I used to be very, very different when I used to go out and party and stuff. I'm very boring nowadays. But, like, you don't go out and you say, oh, chicks, who wants, you don't talk like that. There's certain ways that you have to be elegant and going, oh, what's your name, how's the drink, whatever the case may be. Someone just said here, Nathan Birch, the modern day chopper reader. Got my ears still, But the thing is that the bank wants to give you the money. It's how you ask them, hey, give me some money, right?
Yeah.
It ain't being rude, it ain't giving aggression, it ain't having a gun, it ain't doing anything like that. It's being nice. It's knowing what the bank wants from you. It's asking the bank out on a date and saying, okay, now we've had some dinner. How do I get it? Like, the pen is what gives you the money. The piece of paper by signing the documents is what gives you the money. It's how you present yourself to the bank, and you need to be attractive to the bank. There's certain things you need to do. Each bank is different. You know, you go out, you find 10 women, they're not all going to find you attractive, right? You need to go and ask the questions and find out what each one has to offer, and then you go and, you know, propose that you go on a date with them, right? I'm just making it up, you know. Right? And, you know, one female may accept you for this, and this one would say no, right? This one may accept this. And when it comes to you presenting yourself to the bank, you need to think of yourself as being an attractive candidate for the bank to want to give you all their money, right? They're going to give it to someone, right?
Yeah.
And they give money to dickheads, right? They give money to all different types of dickheads in the country. But it's how you approach the bank, how you present yourself, how you ask for it, right? And a lot of people don't know how to ask, right? And that's where Dinisha comes in to romance and wine and dine and make sure that the bank is happy. She's the dating agent for your finances, right? When you look
People are going to say that.
no, right? What are you saying? Nathan's dating advice here, right? The thing is that the bank, then if you say, oh, give me money, right? They're not going to go home with you, right? The bank's going to be like, okay, this is what I have to offer. Here's my profit and loss. Here's my financials. Yeah. We've got a very mutual person that we have in common, right? That me and Dinisha know very well. And you know the person, right? I'll write the name here, right? This person, right?
Yes.
And that person, when I met them, we were talking about finance, right? It's in the finance world. And that person said, Nathan, you're the only person that's ever come to me the way that you've come to me. And that's why I've chosen to deal with you. And most banks would have turned me around. This is someone at a bank many years ago. And most banks would have turned around and said, go away, right? You look like shit, right? But I came in with an Excel spreadsheet. I had like 25, 30 properties at the time. I said, hey, I need some mortgages. And they go, well, that's interesting. I've never seen this beforehand. But instead of going to the bank with just, I've got property over here. I've got a bit of... Well, I came in structured.
Knowing
right?
Everything.
I knew exactly what I needed. I came in like a business.
Yeah.
I gave away my business
so you
plan.
Wore your suit.
I wore a suit too, actually. I wore a suit to the bank, right? So I didn't look like a dickhead with a rat's tail, right? Nowadays,
Someone please work cutting his hair.
I need to lose some weight.
I can't.
I need to lose some more weight.
It's ridiculous. You know when you came to that, the event, right? You looked so good. As soon as you turned back, I was like,
I went to an event with Dinisha recently, and I had a bow tie on. It was a black tie event.
He was so good, and then that hair just...
I had a little top, bit on the back of my hair that was like
just
pretty
letting
cool.
you know, nobody likes it.
I know, I don't like it either. Oh, my hair looks like the Lego man. Look at it. I look like the Lego. My hair looks like the fucking Lego man, right? I want to cut it off, but I made a commitment to myself that I'm not going to cut it until I get to 99.9 kilos. So
are you nearly there?
I got to 101.9 and I'm back to about 104 and a half. So, I need to get to the gym a bit more, and I've been very busy and a lot of things on. So
you're actually not going to even trim it? I
trimmed it. I trimmed it a couple of weeks ago, about 2 months ago, for someone's event. It was really bad. And I thought maybe I'd have to do a speech, so I trimmed a little bit. But then I feel like I got lazy. I'm like, okay, my hair looks okay now. I hate my hair. I literally want to cut it off. But until I do that, that's fine. So I don't like it. So it will go. I just need to...
I won't give you any clients until you cut your hair.
Okay, well, I'm going to get to the gym. What were we talking about?
We're talking about dating agents.
Oh, yeah, we're talking about how you present yourself, right? And this person said that I wore a suit and whatnot, and I went to the bank and I was like, this is my position, right? And I had an Excel spreadsheet. I knew every single rent. I knew every single property. I had everything. If someone comes to you and says, hey, I want 50 mortgages, you're going to go, well, you can't get 50 mortgages. But it's like, okay, we need to do one step at a time, right? And you need to have clarity in the way that you speak, the way that you present.
I feel like you need, not just, I guess, the broker that also put commitment, but the client has to really put
Exactly.
commitment as well, right? Like, you know, so when we ask for documents or anything like that, it's not like we just like asking documents.
Exactly.
You know, it's just that something that we need to provide. And as a client, if you're very interested and if you really want to, you know, progress in your portfolio journey and your, you know, increase your properties, then you should be like on your game.
100%. You tell me what I need to do.
Yeah,
That's
exactly.
literally-
Yeah.
You tell me what I need to do. You give me the money, I'll do whatever you want me to do, right? I'll name my first kid Dinisha, right? Whatever the case may be, right?
It's a very good name.
That's the thing, right? It's like people will just be like, get me the loan or whatever, but they don't know how to ask for the thing. The banks want to give you money. You do not have to go to the bank with a gun and the stockings on your head.
The banks actually, their business is
Giving you money. It's
Yes.
stupid, right? People don't realise. But it's how do you present yourself to the bank?
Yeah.
How do you get the bank to go, yes, I'm going to give you another $1 million? It's not, it's how you present yourself. So you need to show your file. You need to be able to provide everything to Dinisha. If Dinisha can't understand your position, then she can't go and present to the bank.
Yeah.
Right? You try to hide something from Dinisha, and Dinisha goes to the bank, and it comes out anyway because you're trying to, lie to Dinisha. It's not going to be pretty for you, right? It's like, all truth comes out.
It's like
So-
at the end, you're the one that's losing. And,
Yeah.
so you should not hide anything.
So it's important that like you tell Dinisha as your therapist, hey, this is what I want in the attributes. I need to have good looking, all these sorts of things, right? That's what we want from the bank. So then Dinisha will be like, okay, given your personality, your profile type, you're self-employed to this, these are the options of what you've got. This is what the best way is. This bank, and it's understanding what your goals are and what you're trying to achieve. People just go, I'm going to go to the bank because it's got the best interest rate. I'm going to go to the bank because of this. I'm going to go to the bank because of that. But we need to look at, you're hopping into a relationship. People are hopping in a relationship with the bank for 30 fucking years, right? People don't hop into a job for 30 years. People don't hop in a marriage for 30 years, right? But people go on dates.
Commitment.
It's 30 fucking years. I understand that, right? I remember I bought a shop, right? And I was talking about this with a real estate agent. I bought a shop and I rented it out to Optus for 20 years, right? And I thought about it. I was like, this is my favourite property. And I thought to myself, I was like 30 at the time. I've had it, like when they signed the lease, I bought it when I was like 27, and I put this tenant when I was 30. And I was like, I'm going to be 50 when this tenant moves out, I can develop my property if I want him to move out, and I'll be 50, right? If you're 30 today and you take out the mortgage, you're going to be 60 when you end that relationship, right? You want to make sure you're getting a really good relationship with your lender. You want to make sure that you're getting the right product that's going to take you through the duration of that next, 30 years. So it's how do you ask for that? What relationship's best suited for you? Is your time frame is it to pull out equity? Is it for interest only? Is it for servicing? Is it because you're going to become self-employed? And you always want to start off with like the attractive banks, right? Like everyone wants an attractive partner from all different angles. You want an attractive bank that's going to give you the attractive products, right? The big four are nice and attractive. You wouldn't start off with, see people come to us and they've crossed their loans, right?
Oh, yeah.
It's like you've picked up the scraps when the lights come on at 3 a.m. in the morning when the lights come on at the club, right? It's like, why have you got this loan product? Oh, because I told him it's the best thing I can get. Well, it is the best thing because you're a fucking drongo, right? but yeah, it's true, right? It's like, why have people signed you up to this? Oh, because that's what was told. It's like, people can make stupid choices in life and people make stupid choices every day.
Yeah.
And there's a very big difference that becomes between 1 and 2 properties that people have or 10 or 20 properties.
Oh, I actually spoke to a client yesterday, new client, and I was, going through their finance positions and everything like that. And then they said that they went through a broker to get a property and everything, and they had sufficient amount of funds that they can still get, like how when clients don't have funds, but then in 2 months time they'll get the funds and they'll end up able to still purchase the property. And so the client was in that situation, and the broker ended up putting them to 90% LVR, and it was just because so that they don't lose the property and so that he doesn't lose the
Commission.
Yeah. I was like,
Most brokers out there and banks, if your broker is telling you to fix your interest rate for 2 years, they're dodgy, right? They're keeping you fixed because then you're stuck and they don't have to think of a clawback, which they lose the commission on. Most brokers wouldn't care about pulling you out of equity because then they lose the commission and they don't get it back. So important to make sure if your broker's trying to fix it, if they're cross-collateralizing your loan, there's only...
That's a big no-no.
How many loans have you ever crossed together?
Never.
Not even one?
I've actually never crossed.
Never crossed.
I've uncrossed a lot of properties, but I've never crossed properties.
I know of about 2 properties situations where we've crossed the loans in billions of dollars, and they were for a specific reason. And the other, say, I don't know, let's say a dozen are people that have had an asset that they've sold and done a security swap with, and we've added more properties in and then it's crossed against that security. But if someone's fixing you, if they're crossing your loans, they're doing it to trap you because they're dumb or because they're lazy, right? Because they want to do one application instead of 3 applications. They want to keep you trapped to them, or they're just dumb and they're doing it because they just...
Sometimes some clients don't even know that their properties are crossed, and until we look at it and then
they're screwed.
Yeah, we're like, it's crossed.
Yeah.
So just be careful who you're going with.
Yeah.
And make sure you and I feel like when I talk to clients, I don't just like tell them, okay, this is your borrowing capacity and everything. I actually educate them as well.
Yeah.
I tell them like, okay, this is what the banks are doing, and we don't look at your, like if let's say your goal is to buy 1 property, we don't look at your current goal. We also look at your future goal. So cater to your future goal. What we are doing now should help where you want to be. Right? So come see us.
All these dating references that I was going to say, like, you want to know the future goal, but
Book a date with me.
Book a date with Dinisha, right? But yeah, look, it's something that you need to make sure that you're having that relationship for the longevity of being able to get to the end goal of where that is, right? Everyone's position. A lot of people, I'd say 95% of people out there, their relationship finishes after the deed's done and when they've got their contract done and their loan's done. That's it, right? They just get stuck in some shitty, boring 30-year commitment to a bank, and that's it. And it doesn't get pretty. So you need to look at how can you get out, what can you do for the next steps, all those things to plan. So cool. Any other comments, Dinisha?
No, I think I'm pretty much covered, to be honest.
Beautiful. I would read all the comments here, but unfortunately the phone's too far away.
I actually cannot see. I'm literally blind.
Blind, okay.
Yeah.
I can read it, but someone said, why bother lying? I've never understood that.
I never understood that either, but people do lie. They lie about, can I say or no?
Whatever, yeah. Yeah, exactly.
I don't know what I can say.
You've already talked about some pretty controversial, innocent things at the start, but go.
Like people lie about, kids. Like, when they actually have kids, but they don't have kids.
Yeah.
Like they tell us they don't have kids.
They lie about debts.
They lie about certain debts. Yeah, but the thing is, bank does comprehensive check, and even let's say you're self-employed.
Your bank
your tax return will tell you how many kids you have.
The tax return has it on there. Your Medicare card shows how many kids you got. Your bank statement shows that you've been the fucking baby bunting 3 times last week, right? You say that you don't have debt. Well, your credit file tells you got debt, right?
Because then, if they find out, they usually do anyway, that will just hinder your loan and that will hinder your credit score.
And that will dent your relationship with Dinisha because she has a very good exception rate when it comes to the banks. And when the exception rate, when she puts a submission for a loan through, she's looked at everything and go, you don't have to lie. Like you lie and then it comes out and you're screwed, and then the bank will throw you out, and then Dinisha won't want to deal with you because you're dodgy, and we don't want to deal with that stuff. but
Then you break up.
You break up, right?
Yeah.
Because you've cheated on Dinisha. Because you said,
Yeah.
exactly. But if you're open, honest about it, Dinisha's like, okay, yeah, sure, you've got those faults there, but how can we make that look attractive, and what's the bank
and
require?
there are also, again, like we don't just do one or two banks, right? There's so many banks we work with. So whatever caters to you, we will go from there.
Yeah. Lots of comments there. Brendan always puts these funny comments in, which is, he always talks about, because one day I said, pass around the B.Invested blunt. And,
All I can see is like emojis.
He always talks about passing it around, the B.Invested blunt of knowledge. So lots of interesting things there. If you've got some questions, send them through and we can answer them while we've got Dinisha here. But if someone wants to contact you, there's a link in the description. You can book in a sort of a meeting with Dinisha. You get a free financial health check with chatting with Dinisha. You can click on the link wherever you're watching this from. Today it's on Facebook Live, but it could be from whatever platform that you're viewing this from. Reach out to us, have a chat with Dinisha. There's all different things that I've seen of recent times, right? You talk about your win of the week the other day, but there's so many things where I see people coming to you and their credit files are screwed, or they've got, they think that it's the end of the road, and most people think, I've been told no. It's like, there's plenty more fish in the sea out there, right? You need to get someone that understands your position, that has access to all the lenders. There's literally hundreds of lenders across the country. You might have a very interesting situation. You might be discharged bankrupt. You might be self-employed. You might be self-employed in a different country. You might be not even a resident of Australia and you can still buy a property. There's all different things that you can do, and it's a matter of sitting down and talking with someone that's been able to help people do that and be able to get them to where they want to be. So, reach out to us. And any further comments or things that you have that you wanted to talk about today? I saw you had some little notes here beforehand. Did you?
I know. Yeah. But I've pretty much covered, most of the things I've covered anyway. Yeah. But I would also say, focus on your finance position. Don't always get stuck in the same income.
Yeah.
Or like what Nathan says, increase your rent.
Yeah.
Increase your income, like something that...
I see my note that you couldn't read, right? The benefits of rent increases, right? The benefits of rent increases. So I don't think that they come hand in hand enough. And I think that people don't realise, right? I had a client of Jeremy's the other day who I caught up with. I don't know who manages this person. I'll write the name down and see if you manage the person. That one? Do you manage that?
No.
Okay. So this client on like 70, 80 grand a year, she's got her rent of her properties is about 180 grand a year. We put the rent up by 30 grand a year by just tightening the rent up a little bit. And I realised by the end of the conversation that, 210 grand a year versus a 70 grand income, that's like 3 times the amount of your income is now as rent. Yeah. And if you look at it, like the income is only 25%, and people don't realise over time that the income becomes, like for finance, you need to have a nice income. People think they can quit a job and all that, but it's very complex finance. Otherwise, everyone would have, if it was easy, everyone would be doing everything. But, like growing your position, like most people think one-dimensional, two-dimensional, if the best, right, as their position. But, we live if we believe in, different things, we live in a multi-universe, and, we need to look at things from multiple dimensions, right? And as an investor, like, if you think you've got one income, you've got one income. If you think you've got 2 incomes, you've got 2 incomes. If you think you've got 10 incomes, you've got 10 incomes. How can you keep improving your financial position to make yourself look more attractive to the banks? What sort of questions can you be asking your broker? What sort of things can you be doing? So my question from before is, what is the benefits of, like, let's say $1,000 a week rent increase? What would that do for someone?
$1,000 a week.
Yeah, so $1,000 a week, 50 grand a year. If someone's income goes up by 50 grand.
I just want to put it out there, with rental income, at the end of the day, the banks will only take 80%.
80%.
80%. They will never take 100% because you know, sometimes, for example, you don't have tenants, something happened,
Yeah.
so they always take 80.
So if someone came into you and said, I don't want to put you on the spot because I know there's lots of
But you always do put me on the spot.
It's good. We challenge. We challenge. What's this here? Cool.
It's hard to say because it just depends on different banks, right? Because
Every
different
bank's
banks' servicing calculator is different how they calculate.
CBA will cap your income at 6%.
6% yield.
So
most of the banks, most of them do. Some banks do just take, 80% rental income. So I would say if it's like 1,000 per week.
So $1,000 a week. Let's say it's 10 properties at $100 rent increase. $100 rent increase. That's $50,000 a year. $1,000 a week. So the bank would take 80% of that. So it'd be $40,000 that they'd have. If someone added $40,000 to their bottom line, I'm just making up numbers. Could it be like a couple $100,000 a year extra servicing?
So I would say maybe I don't know, Rose is watching.
Everyone's watching, right? But the thing is that
somewhere around
400, yeah. So if you have assets, a lot of people don't sit there and go, how can I extract and squeeze the most out of it? Like, yeah, sure, your interest rate's gone up, your servicing's become shit. Well, what about a convergence of a few different things, right? Maybe you can go and ask your boss for an increase. You might get $10,000, you might get $5,000, you might get told to piss off, you might get told that your job's redundant, right? Who knows what's going to happen? But if you've got your rents, you can go and ask all your tenants, $20 here, $30 there, $50 there. You're taking control of your personal liberty and freedom, and that's what investing is all about. And having those multiple assets gives you multiple options to be able to, do that. So, we put a big disclaimer over that, right? Like, it's different, right? Every bank looks at it differently. The bank might say, no, you have no chance of getting, even if you get an extra 50K. But at the same time, you might be able to open elements to go to a different lender by doing that. So it's important that...
But not only every bank is different, everyone is different too.
What do you mean?
Right, like their position as well.
Correct.
Right.
Yeah.
So some clients that has 5 properties, you can't compare with someone that has 10 or properties for one property, right? So
correct.
just because sometimes people compare.
Yeah.
Like I had a client who was like, oh, how can I be that person, right? But if your position doesn't allow you to get where they want to be, then you should be. Regardless, you should be proud of what you have accomplished so far. Yeah. Right? And just don't ever compare and just always, I say every 3 to 6 months, just check with your broker and see what you can do. Policies does change.
Have a good relationship with your broker.
Have a good relationship,
Because asking your broker, I
bribe my clients, by the way.
What do you mean by that?
I say if you give me chocolate, otherwise I will get your loan approved. So that's like the relationship.
There we go. We'll be very clear on that in case there's comments from the government listen and say that we bribe our client for chocolate. She likes eating food, right? She likes eating food. Keep her happy. She gets food. She's happy, right? So
yes.
It's good.
I'm no shaming.
What was I going to say? Yeah, I think whenever I hear someone come to me and they say, I can't borrow something, I always want to know the most amount of answers, right? So I think it's important as well, and Dinisha will hate me for this, and I'm throwing it out there. She's like, okay, I'm going to, whatever.
I put you on the spot there. I don't mean to put you on the spot, but yes, Nathan.
No, so I don't mean to put you on the spot, but whenever someone comes to me and says, hey, I can't borrow, or whatever the case may be, I always ask him, it's why, right? It's like, I think as a kid, like people don't, we're told not to ask questions, and it's like the system beats us down and all that. Yeah. But if someone can't service, I always ask them why, and they 9 times out of 10, like normally it's before they've sort of come to Zinger or whatever, it's like, oh, I don't know, right? And it's like, well, if I had a goal of X and my position, and someone was in front of me, I'll be like, well, then why the fuck can't I get away? If you're playing a computer game, like there's lots of kids out there now playing computer games, going boom, 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 killing someone, doing whatever on a computer game. They want to get through checkpoint. They want to get through to the next level. They want to get to the next thing. You ain't just going to cruise straight through and go, oh, well, I just walk straight past checkpoint. It's like you have to do something. It's like, well, what's stopping me from getting to that level? I want to know what can I do to improve my position? So everybody should be sitting there. If they're told no from their bank, well, why, right? And I always encourage people to say that to whoever at Zinger. It's like, well, why? What do I need to do? And it's like, well, you don't service. It's like, well, why don't I service? What do I need to do? So if someone comes to Dinisha and says, I want a loan, she's gone through and she's checked out with 50 different banks looking at your position, like, it's important to go, okay, well, why can't I do that, right? Like, she go, well, you don't service. But it's like, okay, well, how far do I fail servicing by? I think it's an important question. And I know it's different for everybody's position, but it gives someone the ability to go, what can I work on, right? It's like, could I get a better job? Could I get a higher paying job? Like, people just
But the thing is, like,
yeah.
I mean, but we can't, like always.
You can't.
We can't advise, right? Like, we can't be like, oh,
true.
You know what? I would love it if you earn like 300K.
Of course, right? If everyone earns $500,000 a year, that'll be fine, right?
Right. So
just go and get $500,000. It's easy, right? And that takes me to another question, actually. What would be the average income for one of your investors with double-digit portfolio? Like pay for their job, just for people out there that are watching.
double digit, right?
Well, I don't know, like say 10 properties, what would someone be
Yeah.
on to get there? Like 100 grand, 80 grand, 60 grand, 200 grand?
I think like maybe
Go on.
100.
100?
Yeah.
100K a year, 10 properties, yeah?
Yeah.
Perfect. If you go to an all broker and say, I want 10 properties and all that, they're like, well, you can't get there, right? But it's like, it's understanding how the banks work, understanding how to structure that loan. But I had another question I was going to ask, but I've forgotten it, right?
I should stop talking.
No. It was to do with the position of like, what can I do, right? Like, if you can't give advice, right? You can't give financial advice. So let's be very clear on that before people start calling Dinisha and go, oh, well, should I sell this one or should I do that one, right? You as an investor, you should be your own financial advisor. You should be in control. If you want to be in control of your position, you need to take fucking action, not be lazy, right? People are so lazy, they're wanting someone else to do it, right?
Yeah, you should know.
So I'm asking that question shouldn't be, oh, Dinisha, should I sell a property, right? Should I do this? It's understanding why, what is in the way, right? Oh, you've got 3 kids. Well, you can't go home and change that situation, right? That's not something that's going to happen, right? But if you've bought a shitbox property, you should be questioning yourself, hey, I've got myself 4 car loans, 3 bloody credit cards. What things are holding, like, I can't get a loan. Okay, Dinisha.
Yeah.
But why? What is the top 3 things that are holding you back today, right? And you can't give them advice and say blah, blah, right?
No, but you're right. Like, I would say, like, besides your mortgages, right? Like, having, like, personal loans, car loans,
credit cards.
Credit cards, because some people have credit cards for points, you know what I mean? And they don't want to
let go of it.
let go of it. And unfortunately...
Well, your velocity points are now fucking you up from getting retired. So good luck. You ain't going holidays. You're going straight back to your fucking job and doing work for the next 20 years.
It's good that you're saying. So, like, all those liabilities are pulling you down.
Yeah.
You know, and that should... something that you should actually look at.
When you met me, I was driving like Bentleys, G-Wagons. I had like $1 million worth of cars in the basement, remember?
Yeah.
The old office. What car was I driving last year? The pink one.
The pink one?
The pink one, right? What sort of car? You probably don't even know. You just go, it's the pink piece of shit down there, right? The car.
No, I don't think like that.
No, look at it. It's a piece of shit, right? It is.
I drive a good car too, Toyota Corolla. I mean,
This is a Mitsubishi Mirage. The paint's faded off it. It's got dents all around it. It's had heavy smokers driving the cars over the years. It was a $500 car I was driving, right?
oh wait, you know, there was one time, remember that one time I came to you and I was like, oh, I want to buy a car?
Yeah, I do,
Yeah. And then, so I wanted to buy a car, you know, like,
Yeah.
you know.
I deserve a new car now.
And by the way, Nathan, new car for me, okay?
Okay.
So basically what the story was, I had a property and I was able to, you know,
Pull out equity.
pull equity out, and I had a bit of money, and in my mind, you know, I was thinking, oh, maybe I should get a car and then maybe save a bit later and get a property. And I'm very glad that I actually spoke to you.
Yeah.
you know, I always tell Nathan things about like whatever's going on in my life. So like about that property, like about the car, he was like, yeah, if that makes you happy, but you know, like, you know, where the car is going to take you, it's just going to take you to different from one destination to another destination, you know, regardless of Merc or a Toyota, it's still going to be the same destination. Where the property is going to take you, you know, you're going to have an asset and that's going to grow, and that all that conversation we had, and I didn't buy a car and I bought another house.
It's probably gone up 100 grand. You can sell it and buy them at cash, right? If you want to. But
so it's really what how you actually, I guess, like, you know, what's important to you at the end of the day, right?
I still remember at the time, you know, there was a few changes in our lives and that, and then you said to me like something about like, you know, Nathan, like you're very different than other people in my life. Like you take like I'm very rough, right? It's just like something like, it's a nice way of saying like you're very harsh. You just go, oh fuck it, right? No, I don't think anyone in your life would be like so just she'll be right, whatever. But you said that you like the fact that I say it as it is, right? Where it is, right? I'm just like, it doesn't change your life. You get my card, like you're happy, right?
Like why sugarcoat it, right? If it's
no sugarcoating. It was like, but sometimes you need to hear that, and people need to hear it, and you know, people don't want to know it. And it's not Dinisha's job to go, oh, you're stupid because you've done this. Like, and it's not what we think, but it's like in the bank's eyes, the bank's looking at you saying, I'm not going on a date with this person because X, Y, Z. If you clean your act up, you get a haircut and, you know, whatever, then this one will go for a date with you. So they're questions that you should be asking. It's not, Dinisha cannot tell you advice of, hey, go and, you know, sell off a property or sell off your car or whatever. But you need to be critically thinking and assessing yourself and critiquing yourself, saying, well, what about if I did this? What about if I did that? Right? And that's, you need to look for that self-improvement on that side. So, I think that's very crucial for people to be seeking, like, how can I improve my position?
I think there was another client as well we had, and I got this client 23 properties.
Yeah.
We got the client 23 properties. And the client went from having like this nice, I think, European car to like a shitty car, just so he can grow his
Is that one? Is that the one?
Yeah.
Yeah. So the client is actually going to sell a property that we've had a discussion with, and I need to chase him up. So actually, if you can remind me of that later, we're going to chase him up. He's going to sell off one of his other properties, and I think he'll be able to re-enter the finance market, even though it's going to be tight. But he'll be able to buy like 12 or 15 other properties because it's got like a significant amount of capital in it. And you know, they're the things that you need to look at, like each step of your life. And if we think about like the relationship that we're just talking about, you know, getting in a relationship with a bank, but there's different phases, right? There's a phase when someone's dating, there's a phase when they have a kid, there's a phase when they retire, there's a phase when they become empty nester. As your portfolio grows and evolves, you need to think of what phase am I in my journey? Like, do I need growth? Do I need cash flow? What can I do to improve? This guy's property is very good from a growth perspective that he's had, and now it's time to cash that in to get more cash flow so he can retire. And he's at the point of retiring, and he'll probably retire with about 50 doors in his property, like 50 keys in his property later this year. And he's in his dream house with a jetty on it and all those sorts of things. And, So there you go. You help that person in a year get like change their whole life. They had like 3 properties, get to like 30 properties, and then get the dream home. And
It was very good.
Yeah, people think it's impossible, but So, you know, we can't promise everyone's going to get a house with a jetty attached to it and all that in a year.
I'm still waiting for mine. Still waiting for the helicopter.
We will get a helicopter. We will get a helicopter one day. We will get a helicopter, the B.Invested helicopter.
Nathan's promised me many things. This is like, you know, witness.
Yeah, well, so just be careful. Just be careful. So we've discovered that Dinisha likes food. Do you have any requirements for the types of food that you prefer that people give you?
Book an appointment and I'll tell you.
Okay, great. Tell her your problem, she'll tell you what food she needs. So
People gonna really think I'm such a foodie now.
No, I'm just genius.
It's all jokes, right? It's a bit of fun.
Exactly. Right, because finance would be very boring, right? If it was just, oh yeah, how many boring people are out there when it comes to finance, accounting, lawyers, stuff like that.
But
It's
you
like,
should see our team. Like,
Yeah.
oh my god, every day there's non-stop conversations and scenarios and, yelling at the banks and all that stuff. That's like the most funnest part, I would say. When we try to get your loans, sometimes we have to fight
It's
with the
fine.
assessors.
It's like I've heard swearing. I've heard people go, "This is not how it's going to happen. You must sell that property today. It is not acceptable. Put me on it. Put it. No, do not hang up on me. Take a note of this. File it. Put it on to the manager. It has to be happening." Right? These are things that have to happen, right? These are things that have to happen from every team member. It has to happen. I don't think people would see. It's like, oh, your loan's approved. Your loan's not approved. It's like, we're aggressive to get those portfolios.
Yeah.
We need to make it happen. We need to do it with force. We need to do it with, but it's like, there's a way to do it. We always start off, you can never, if you start off as being a gentleman, you can always, come back to it, right? But you start off like just being shit, you can't get there, right? So you start off at the top and then sometimes you have to, take it down a few steps and take it out to the street and make it happen. And, the loans get approved and we get results, so that's important. So, on that note, guys, I don't know what time it is. I think we've been on for a long while.
Yeah, it's 9.
Wow, we've been on for 2 hours. So thanks a lot, everyone, for tuning in for tonight. It's a very long time. Hopefully you enjoyed it. You got something out of it, and make sure that if you have a property, that you speak to Dinisha or the team and see what you can do with your position. If you don't have a property and you want to build a portfolio, speak to Dinisha or the team. If you're thinking about a property, if you're thinking about expanding your property portfolio, if you have kids that you want to help out, like you've got second generation investors that we're helping out that have got their kids now that are buying properties and all different stuff. That's really cool. Actually, I had a thought about someone. I'm going to make a little note here. I'm going to get that person's son. I've got a client. He's probably watching this. Is he a client?
No.
Oh, no, it's Rose's.
Rose's client,
His son just bought his first property. This guy bought his first property and his kid was like fucking 5, right? His kid's now buying properties through me. Right?
That's
crazy.
crazy.
Right? And now I'm going to see if I
I
can
did the
pull
same thing too,
Yeah, I know. Yeah, exactly. Yeah, but
Yeah.
I know. So it's Dinisha, your family came on board, and then you came on board, and it's like
I mean, I can say that's no problem. Like my parents got properties through Nathan, and then my dad decided the daughter, like me,
good property. There we go.
And it should be like that, right?
Yeah.
You should also teach your kids, like if first of all they have to be over 18.
Yeah, but I think that it's good that say the hustle, right? If you see what your parents go through, then you're going to be like, okay, that's something to do, right?
Yeah.
The dad's like my family. My dad was a mechanic, so 2 of my brothers became mechanics right? Yeah. Someone that wants to be a lawyer, and then there's kids a lawyer, right? Yeah. And it's like parents follow, the kids follow because that's all that they know. Yeah. And
but sometimes kids don't know when to start off the right path. So that's when the parents, come on board and put them to the right team.
That kid, his dad makes him watch all these things. They're very on board with what's happening out there in the world, and that person, he's getting one on its way anyway, right? He's settled.
He's got
He settled. I want to pull the equity out. That's what I wrote his name down for. I want to pull out some equity. So let's see if we can turn that around for him. And
stay tuned.
If he's watching, actually, I will put it up. We'll ask him if we can get the equity out and we can do it. Because I'm sure that there's another deposit in that. And he only settled. He's 18, just got his first job
not too long ago?
2 weeks ago. So 2 weeks ago settled. It's a unit. I think we'll be able to go back and get him his second property in a month. Yeah, and he's 18, so there we go. That's how we do things, guys. If you need help, reach out to us. You know where to find us. We'll catch up soon. Have a good evening. Bye for now.
Thank you.